Hey everyone, it's Evan here from the Trade Risk on Friday, December 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's video, we're going to discuss all-time highs being set once again here in the S&P 500 and the NASDAQ Composite. We had the SPY ETF go ex-dividend, and we also had technology and semiconductor stocks really having a strong finish to the week. We're going to talk about all of this and some more right now. All right, let's jump in here with the S&P 500. I'm a bit pressed for time today. I wanted to get this video out before I had to run, so I might move through this pretty quickly, maybe a shorter video than usual. Let's see what we can get through in this, if we can touch on everything that we want to move through. So first things first, S&P 500 did go ex-dividend, so if you are used to looking at that SPY chart, you can see here it looks like we're only up 32 bips on the day. You can see it's not quite at all-time highs, but yes, we actually did make all-time highs, so you want to be careful if you're using the SPY ETF for your charting this weekend. Just do note that this chart does look a bit more bearish because it is skewed down about $1 or so for the dividend that occurred here on Friday. So if you want to go to the accurate chart, you use the cash weighting right now. So we're looking at the SPX here. You can see we're actually up 90 basis points, almost 1%. That's 23, almost 24 handles in the S&P 500, closing at 26.75, new all-time highs. So here's what happened this, well, actually, let's first go to the weekly chart. You can see here, once again, all of the gains from this week here on the weekly chart basically happened on Friday, and you can see new closing highs here. Once again, momentum continuing. We had this sort of interesting wider range candle last week where we traded all the way down to this 26.25 level until we did bounce up, and then of course we're now getting that follow through higher this week. So the trend here remains strong. Again, kind of the same MO. Nothing's changing here on the structural basis. On the intermediate term time frame, it's as strong as ever. New closing highs, momentum still building here as signaled by taking two moving averages, in this case the 8 period and the 20 period, and looking at the distance between them, you still see the 8 period actually escaping away, which tells us that price is accelerating here in the short term to new sort of momentum highs, new closing highs, and the trend is strong. So on that bigger picture, life looks good for the bulls. On the daily chart, we had a little bit of a sort of a test, a bull trap, a bear trap, if you will, here on Thursday. If we just kind of dial this back, what a difference Friday makes here. So this was the chart on Thursday. Basically what we saw was when we came into the week, we set new highs here on Monday. Then we had these two kind of very quiet days. We traded up in the morning session. Basically across the market, it was the same thing. We had this slight gap higher. We had a trade through to new highs early in the morning, late in the morning, early afternoon, and then we had a fade into the close. That happened Tuesday, it happened Wednesday. Thursday, again, we had that slight gap up, and then all of a sudden, we had a little bit more of a reaction and a sell event into the close here. So Thursday was a tricky day for you active traders. It caught me, and if you were active looking at this as a break below the prior 2-day lows, break back below the highs here from December, you could have had a tight sort of actionable short signal here. For us, we weren't interested in shorting the market or getting bearish here just because of the weekly chart, right? The trend is so dominant here on the daily, on the weekly bigger time frames that we don't want to be a bear, but it was worth a hedge for us. So we did put on we kept all of our longs on, and we put on a short position in the S&P 500, thinking that this could come down here, fill this gap, perhaps test the 20-day, and we'd have some near-term protection while sticking with our longs. And of course, we saw what happened Friday, completely reversed it, broke to new highs, and you know, that was all she wrote for this little trap down here below the prior highs and below the prior 2-day lows. So needless to say, we covered our hedge here on Friday, a quick on Thursday, out Friday for a small loss, but the good news is we still have all of those longs on, so we're still trying to participate while actively managing risk in a case like this. Now, hopefully, you know, this here you could arguably say was caused from some of the panic or the uncertainty behind the tax bill, and maybe doesn't have as much support to find, to ultimately get it through. And then all of a sudden we do have it for Friday. So maybe a lot of games getting played. Hopefully, we're not out of the woods yet. We still have that catalyst to sort of keep us on our toes. But for now, the market seems to be responding favorably back to closing at highs. So for technical basis here, again, trend, momentum, breadth, looking at those three factors. Breadth using like an AD line is back to new highs. 52-week highs are still staying pretty strong, and trend momentum, as you can see here, are back to highs. So bulls firmly in control. If you get shaken out a little bit here, that's fine. You can stick with it. Again, I don't think you have to be all in, but participating on the upside, that totally seems to be where you want to be in this type of market. The IWM, again, a lot of trickery here. We talked about this. We've even put out a video here on Wednesday on some trade ideas saying, look, if the IWM can hold in here and get that nice close above 152 and take out these prior highs, that could be an interesting sort of get long scenario with some tight risk for a trade back to the highs. Wednesday, you didn't quite get that strong close. You had a pretty good fade back below 152, so hopefully that trade was avoided. You had a nice shakeout here on Thursday, closed right at this 150 level, which again is an important area judging by the amount of supply back here from October. And then you had this pop into the end of the week, kind of like we had in the S&P 500, not quite at all-time highs here in the small caps, but trying to get through some of these recent highs here. And still you saw a pretty good fade here into the close. So the IWM, while up 1.5%, still kind of reluctantly hanging out around this level. But all in all, I think, the bulls did a good job this week at sort of reversing the action, holding at that 150 level. And so far, we are holding where we need to hold. So I like the IWM here, so long as we stay above these lows from this week. NASDAQ, you can see here, breaking to new highs. Good volume all around this week. I know we had option expiration, some things that could be influencing volume, but good volume on Friday's action all around, which was a generally positive day, so that speaks well for the bull case. But you can see here the Qs resolving this range, didn't really, really just kind of blew past this, stutter stepped at these prior highs here for Wednesday and Thursday, right around 156.50. But the NASDAQ was strong all week. It was the leader, 2% to the upside, just about 2% to the upside. And once again, when we look at this weekly chart, this trend continues to be strong here. And you can see we're above the 8 and 20 period moving averages there on the weekly chart. New closing weekly highs. Bulls very much in control here as well. So that's the market environment overall. Basically, a little bit of kind of song and dance in there, shaking around Wednesdays and Thursday in the market. We had some strong opens and some fades into the end of the day, but come the end of the week, when everything is said and done, the bulls got the job done, and we are closing at some new highs there in the S&P 500 and the NASDAQ. Still got some of that catalyst on the tax bill and news and support and no support. So keep that in mind. We could, we could get derailed, but we're coming into a slower time, end of year, holiday trading. People tend to take a step back and think on the positive side as markets potentially drift up. So that's the market environment. Let's take a look, run quickly through some of these other major markets. We get TLT, which is finally starting to get back above and clear some of this old resistance. You can see it closed right at last week's highs here, up 1.3% on the week. Not much volume coming in, but bulls continue to be in this short-term trend. It's been choppy in here. I've called it a headache all this time. It still looks like a headache, but you can see at least now 4 days up in a row here, trying to clear above now June highs. And of course, we get the September highs here right around 129 or so before it starts to look back into the early, or actually summertime months of supply, trading up here right around 135. So for now, TLT bulls remain in control. It's not the cleanest chart. I'm not loving it, but bulls are getting it done if you're involved there. USO, we still are consolidating here. Not much has changed. You can see we're still making some lower highs and higher lows, so still waiting for that resolve. Something to pay attention to, though, especially if you're in that breakout, looking for range expansions, either up or down. Pay attention to USO. The intermediate trend is up. Let's see if we can start to either get above 1165 or start to fail below 1115 next week. I think those are the interesting levels to pay attention to. Natural gas, nothing new here. Sellers sellers are still in control. We got new lows on the week. 522 traded a little bit off of the lows of the day, and some volume starting to come in. It's stretched, so you could get that snapback at any time if you're an active tactical trader looking for some mean reversion, but technical basis, structure-wise, sellers are just very much in control here, and that doesn't look to be changing anytime soon. The metals, they did get that snapback this week, so let's look at the weekly chart here. You can see up 0.5%, but that's after trading down to about 117 or so in the GLD. So again, technically, the structure here is still pretty poor for the bulls. You can see the fast-moving averages are still bearishly aligned above price, so that's not generally a place where you want to be looking for long entries. But if you were tactical in here, looking for that mean reversion, the stretched markets to the downside, you may have caught this nice bounce in GLD. I'd still say it's a seller's market here, but we could see if that starts to change, if we can get back above this old level of about 120 or so, which was pretty significant here back in the past few weeks. If we look at silver, same type of scenario here, 1.25% up this week, and that was after probing to new lows earlier in the week at 14.75. So we got about a 50 cent, 35 cent pop here off of these lows. Again, bearishly aligned kind of structure here with those moving averages and recent price action. So I'd still say you need to be very cautious, but some opportunity there for you real active traders out there. So those are the major markets I wanted to discuss. Let's take a look at some of the sectors now. XLK on the upside. This is technology, very similar to the Qs here, but right back to these highs. Almost got an all-time closing high, but didn't quite take out those previous November highs. So right back to the highs. Looks good, looks strong. We got a new kind of higher low to work against. Basically the lows from Friday, I think, would be your upper level sort of line in the sand. Financials continue to remain strong. We didn't break to new highs. We did have the rate hike this week confirmed by the Fed, so the markets did digest that and get through it. Financials did not rally on that event. Perhaps it was fully priced in, but we haven't quite broken down yet either. We pulled off of these highs. We're holding at this Thursday's low right here, so trying to seemingly carve out this upper level range up here. So if we can stay above 27.60 or so, I still think financials look like some bullish consolidation in the context of an uptrend, so I like it. We have some exposure there, but if it starts to break down, then we'll respect it and move along. So financials still holding up on a relative basis. You can look at the discretionary ETF XLY, which continues its march higher, basically trading at all-time highs here at the close on Friday. Nothing new there. We've been talking about that for some time. And IYT is kind of like in a financials type of boat here. It's consolidating at highs, trying to potentially put in that upper level kind of healthy consolidation after a nice move and a nice run throughout mid-November, early December. So those are basically what we have acting well and near highs. SMH, so this is the semiconductors here. You could look at SOX too. So SMH here, we did have that trend line break. It was underperforming and kind of selling off here for the latter part of November into early December, but it finally started to get a nice pop here and some structure underneath it on Friday. I still think this is a tricky spot. I think you need to be, managing risk appropriately here. It did sell off after this trend line break and kind of reset itself after such a huge run. Maybe that was enough of a shakeout here and we're ready to continue back higher into the end of the year. We did see the ultimate low here at around $96. We popped up, we carved out a range right here, right around 97 or so, and now we're moving back to the upside. So if this is some type of higher low, maybe that's something you can look at as some potential level to manage risk against. It's still a point at which the moving averages here haven't fully kind of turned around yet, so this might need some more consolidation. I don't put this in a high probability situation for my type of style, my type of trading, so I would pretty much kind of avoid this setup, but I think it's interesting. It's got some movement going on. It had a nice finish to the close. You may get that follow through into early next week, and then I think around this $100 level is where is where you'd want to pay attention to. So that's semiconductor semiconductors. On the downside, I mean, XLE got a little bit sloppy here into the end of the week, down 75 bips in the ETF. It's still holding above the 68 level. It's kind of a messy range altogether. You kind of see it stalled out twice now, maybe even 3 times at right over $70. And, you know, this is probably the range we really should be paying attention to. But this level right in here where we put in some of this supply in early October is certainly kind of an interesting, there's almost like your midpoint range. You got the upper end, you got the lower end. So I think this is a good spot to hold on to. If you're a bull here in XLE, you want to see the bulls kind of defend this 68.75, stay above there in the upper end of this range. If we start to fall down, doesn't have to be the end of the world bearish, but it's something that would put you in a little more cautious scenario. That's XLE. XLB, these are the materials. Getting just a little bit sloppy here, kind of hanging near the lows. Thursday had this thrust off of the highs, down about 1% under the 20 period, and then here on Friday didn't get a tremendous amount of bounce back to the upside, so maybe a little caution is warranted, or maybe it just needs more time. Again, doesn't have to be doomsday, just on the relative performance, it's kind of in that lower bucket. And then I'd finally end with XLU, which continues to be struggling here. We sort of talked about maybe the series of lower lows and lower highs. We're trading below this 55.30 level, so some caution here. If I know you guys are mostly active traders, maybe not looking at XLU too closely, but utilities kind of hanging below the 20-period moving average and this 55.30 level, I'd say you got to be a little cautious. So that was the recap. Wanted to keep things short. Don't think that really happened. So hopefully you had a good week trading. Hopefully you have a great weekend ahead of you. Thanks so much for watching. As always, do subscribe if you like the channel, if you like the videos, and I will talk to you on Tuesday. Thanks so much.